Alrighty, the era of guessing is over and the area of digesting has begun. We aren't just looking at beats and misses anymore. We are looking at the massive multi-billion dollar price tags attached to the future of AI. This isn't new. This has kind of been the theme of the last few quarters of earnings. So today we're analyzing if the market can really stomach the Capex or if the everything rally is kind of hitting the wall of reality. So a couple of things, the market themes and macro sentiment, right? The post-earnings volatile regime. So we're moving from a period of earnings anticipation into a period of reaction and digestion, right? So the focus has shifted from companies might say to how they're actually managing the massive scale capital deployment and the guidance shift. So, and also the buy the dip versus sell the news dichotomy. So the tech and growth, they're high quality names like Meta and Microsoft that earnings last week, where they're showing resilience, but the everything rally is facing headwinds as investors start to kind of weigh the Capex, aka AI infrastructure, against its immediate margin. So they've been spending a ton of Capex on it and they continue to do so. So really the AI infrastructure Capex story continues. Meta is a massive driver on sentiment while revenue remains strong. The market is really kind of hyper focused on Capex trajectory, and the narrative is no longer just is AI going to work, but how much is it actually going to cost to build, and also how much money is it going to make them. Microsoft is in a similar boat. The focus is on monetization of the AI stack that they're building, and it's the massive infrastructure spend required to sustain the cloud growth. So there are a few thoughts there. Let's move on to the charts. SPX, the cash index of the 500, you can see it's been a massive move, right? This is not a shock to this isn't new news. This might have been a shock. This was a shock to me. I missed out on this entire thing, kind of lockout rally. I didn't understand it, but who cares what I understand or not? The market is the market's going to do what it wants to do. So if you look on Friday, a lot of people are saying, hey, this is could be an island or shooting star, et cetera, et cetera. We'll see. Nice top and tail, sold or closed at the lows. I would anticipate some sort of selling following on Monday. This is a typical look of it, but you never know. So if anything, I think a nice pullback to retest the highs at least around 690, 6,900 or so, 7,000. That's confluence with the 21 EMA would be healthy, would be good. But for now, the trend is up. The equally weighted RSP, this nice little pullback, a retest of highs. Now we're setting a higher low. This is basically a retest of this level-ish, held at 21. Maybe we get a little tight here when we break off to all-time highs. The Nasdaq also absolutely ripping to all-time highs. This did not have the same closing bar, so tech is in particularly strong right now. It also got hit stronger than the relative market over the past few months, or a few weeks, I should say. And so, the rebound, if people are starting to buy now, I guess you can kind of anticipate that. And the equally weighted QQQs, there it is. Again, not the same look as the RSP, but it still looks pretty darn good. Maybe it's going to make a run up to the all-time highs here. It's only 5% away, but overall, it's equally weighted, so it's got a nice float to it. All right, Microsoft, let's get into it. Had earnings last week, did pretty well. I was saying last week, if you watched my video, that this looks like it's about to kind of start chopping around and potentially start basing. We were looking for a potential higher low versus this, and it looks like we may have it. So structure change, potential structure change over here. Firstly, we're above the 21, we're above the 50. We have a nice bottoming tail on earnings. It tagged the anchor VWAP from the prior low. It's still under the 200, but we have a structural change as a higher high and a higher low. So I do think Microsoft is looking to start turning around. Does it take out the lows? I don't know. I think the lows of the year are potentially in for a lot of these names. Tech got hit heavy. It's been consolidating for the past few weeks. As you can see, Nvidia broke out to all-time highs and then pulled back. So this is the first pullback since setting all-time highs. We're really looking for a higher low to be set. We can set an anchor VWAP to this low and watch to see if that is an area of interest. It's at the 21 now. We have some pivot on gaps that haven't been filled yet, and the 50 EMA. I'd be interested in a 190 area if it can continue to pull back this week. Apple had earnings last week. Did well per usual. Mac minis are selling out. They're also going up in expense. You can see it has a huge topping tail here right at prior highs. Like, we shouldn't be surprised that we are finding potential supply at prior highs. This looks like it wants to continue lower. This is, or not continue lower, sorry, maybe have a little bit of a pullback to it. It's a standard, daily candle look like that. Doesn't mean it's going to happen. Doesn't mean it should make your trading decisions, but it's just one piece of information. Amazon completely just ripped from this consolidation to all-time highs, strong earnings, closing at, had an all-time high close, and continues to look pretty good. This is a place to be. In general, I think you should maybe let earnings digest a little bit. Avgo continuing to hit all-time high. Broadcom, I always do that. Broadcom continues to hit all-time highs, trending higher. This is a place to be. Meta is getting hit on basically because of huge Capex spending and job cuts and things like that. But overall, we have a structural higher high made here. Now we look for, just like Microsoft, a potential higher low. So if you want to put an anchor VWAP, the average participant from this low is actually underwater. So the buyers, the pressure is coming onto the buyers right now. So we might actually get further selling pressure. If that low gets taken out, that'd be pretty wild. It's not impossible, but it's another move down. That'd be interesting. Netflix, it continues to fail to fill this gap. However, I still think that is a potential. It is now wedged between a gap above and a gap below. We'll see which one gets filled. It's not super interesting. Tesla, I do think it's interesting coming up into this week. You can see we're getting a little bit more volume here. This prior level here was a prior high. We got the breakout, came back, undercut into the level. This was a pivot on gap. We also had a gap here that was filled. That pivot on gap from 829 held, and also from 829 as well as 9.4. So this area was pretty important here. You can see that it held, came back above that level, pulled back, retested it, and now it's pushing higher after breaking a downtrend. It's now above the close above the 200. It's basically right at it. Close above the 50, close above the 8 and the 21. This actually might start to turn around. Tesla looks good for next week. Continuation. Google absolutely crushed earnings, closing at all-time highs. It just looks good. It continues to run. This is a name you want to be in. Volatility is a trader's best friend, so make sure you're there. CrowdStrike, base, phase 1 consolidation, broke out. It continues to hold this level. This looks like it is about to start trending upwards. It's holding the 200 EMA. Look at all the bottoming tails at this level here. Buy, right? 200 at the anchor VWAP from the prior all-time highs, at the 21, above the 8. If you want to look down at the 30-minute, you can see this is an obvious area of interest here. It just continues to hold this let's just call it 437 area. If this continues to hold, I would anticipate it, kind of expect it to continue on up. The first level that we have to break is this 465.96 to 461.23. Then we have this 477.96 to 472.11. Then we can continue on higher, maybe to 487 and the potentially 530. We'll see how that actually turns around, but it looks pretty good for a trend reversal, actually. ServiceNow, I'm not even going to talk about it. It's a waste of time. Palantir has earnings this week. I'm pretty sure it's on Monday PM. It'll be interesting. It's basing chopping, waste of time right now. Hood got hit on earnings. Their crypto, I think it's crypto revenue was down like 47%. They're also trying to branch out into other areas. So it's getting hit right now. From failed moves comes fast moves. So it failed to break out. It failed to close over the 21 EMA. And now it got hit. Opposite end range is target when a failed breakout. That again happened. You'll hear me say this over and over again. The patterns play out over and over again. You just have to have a plan to capture them. And then ideally the timing if you work to capture them. Micron, absolutely just a ripper. Consolidated, nice base. Failed to break out, opposite end range, failed to break down. From failed moves comes fast moves, broke out, consolidated, and now it's running. Micron is a place to be, especially on any pullbacks. These are very volatile names, especially these chip names. AMD, look at this, absolutely huge, right? Huge move. But they're the places to be. This is where these are the names. Number one, that I think they're driving the future. Number two, they're super volatile. So if they pull back 10, 20, 30% within, a few days to a couple of weeks, that doesn't mean, I don't think that means they're done. I just think they're going to set up, they're going to base, they're going to find a bid and then continue the next leg higher. So you need to be mindful of that. Be ready for deeper pullbacks on these volatile names. However, I think they're going to stay and remain the places to focus on and to be involved in. It's just being prepared ahead of time. TSM and having a plan executing. TSM, again, place to be. Let's go Oracle. Oracle actually looks somewhat similar to CrowdStrike. Fail at the 200 EMA. Here's the level here. It's over the that it broke out and tested and held, and now it's pushing away. Green day on volume, a little gap and go, and then it's holding the 21. It's above the 8. It's above the 50. We just need to clear that 200, and then maybe we can make a run to 206 or so. So that looks pretty solid. Oracle looks like it might want to trend reverse. Adobe, similar-ish, another trend reversal type look. Honestly, it looks sloppy. I can't even say that right now. Coinbase looks like it might be trying to reverse trend as well. It's at least basing. We'll see if it can break out of this, test that 200, that 230-ish area, 233, retest the breakout level, and then continue on higher. So again, let me help you visualize what I'm saying here. Higher low, ideally set here, breaks out, tests that 200 EMA, comes back, retests this breakout area here, and then pushes higher, and we can actually have a trend change reversal. So we shall see if that plays out. MSTR, similar look, basing. We need to break that 180, 190 area. We have the 200 above at 205. This has potential to reverse trend here. IBM, again, big base. Last week I was saying, watch out for the earnings. The Anchor VWAP, it didn't do anything last week. Literally just chopped around, basically within the earnings range. It broke out a little bit on Tuesday, but failed to move lower. Or move higher, sorry. But we have that gap down and starting to try and work into the gap down, but we have this pivot on gap here where it failed. Basically, it tested this. It's 236.84 to 234.89 area. I would basically watch for these lows. 220 to hold, and if it doesn't, then get out of the way. LMT, last week I was looking for a bounce in defense stocks. That obviously did not happen. I'm just looking for a mean reversion trade and oversold trade. I'm still on that, especially if we get some sort of gap down, little push down, and it come back within this 500 area. I think that would set up Lockheed for a decent bounce trade, mean reversion trade. It's gotten hit, right? If we get a gap down, we'd be pretty extended from the 8 EMA. So we get a gap down again, sell off a little bit, fail to sell lower, come back within this $500, and then maybe we can bounce and maybe even test this 538 gap. I think that would be an interesting trade setup. NOC, similar here. Honestly, this is just consolidating, time correcting to the downside, letting the 8 EMA catch up. This doesn't look the best. Honestly, it looks like it's going to go test 540 area. So this has a decent potential short setup. This is why I have this level here. Look left on the chart prior. Here's a nice push off earnings. Retested this area. It was at the 200 EMA confluence there. Now it's just an area of interest of potential price support. So that has potential. GE, I'm not even going to waste my time on this. RTX, this looks like it's bear flagging. It's underneath the 200 EMA. It's about to tag the 8 EMA. This looks like it's about to break and crack down to the 166 area. Where it can go from there, it does have a gap right here. So it could we could get a gap fill right here around this 160 area. I'm going to set an alert here because there can be a potential interesting buy area. So watch for RTX, bear flag, sell down to 167-ish, and then potentially 162 area. Exxon Energy, I still think is the area to be, especially if oil is not going to come down anytime soon. It's just kind of living around that $100 area. This level right here is an area of interest. It is undercut that level, and now it's back within. It's back above. It's back above the 50, back above the 21, back above the 8. Let's see if the anchored VWAP is of any interest here. It's at the anchor VWAP. So if you want confirmation, you can see how rejected here, rejected here, rejected here. You can wait for it to break above and then pull back and hold it. And I would, we might get an actual run back up to 176 or so. I think that is viable. I think energy is still the place to be. CVX doesn't look as good, honestly. A little, 10% off of all-time highs. The anchor VWAP from this prior low is still holding. It's above the 21, above the 8, above the 50. It looks okay. It's just like it's not as clean. I think Exxon's better. I think Halliburton is better. This little undercut and rally, retest and rally, double bottom here if you want to call it, and broke out of this. Looks pretty good. Earnings, anchor VWAP, respecting it. Halliburton, it's up and to the right. Looks good. VLO looks pretty good too. I was saying last week I think this was going to move. It really just moved on Wednesday. I didn't touch it because it had earnings. So. But it looks good, right? Energy, again, place to be. MPC broke the downtrend line, broke this, it filled the gap. And now, honestly, it looks like it's about to run. I would put MPC on your watch list. If you want to look down at the 30-minute here, this blue line, this blue square here is the 3-day moving, the 3-day pivot. So it's basically the average of the high, the low, and the current close of the last 3 days. And price is above that, right? It's above the 8, it's above the 21, it's above the 50. The trend is your friend. It is up. Don't make this complicated. Just have a plan to execute. MPC, I think, is an area to be in. Now, again, if oil collapses, there's a potential these can collapse as well. LNG, it's not as clean as I would like it. It's a nice retest. This was hindsight's always 2020, but this was the better buy here. Basically on that retest of the breakout. But this just looks sloppy. Let me delete all this. I don't know. It's kind of hard for me to read, honestly. It's not super interesting, in my opinion. KMI at this prior resistance, chopped around, undercut the Friday's lows of the 17th, and then rallied. Now it's at prior support, could be resistance, not sure. High volume, little rest day in a bar. I would be interested in a break of these highs, and then we can run and retest 34.16. So I actually have an alert at the highs of Friday of 32.92, and to see if we can make a run up there. UPS looking okay. It's trying to turn around, but honestly, it's not very clean. It's kind of just grinding up. I have an anchor VWAP at the earnings here. It's at 105.50-ish right now. Nothing really safe. FDX, FedEx, this looks pretty solid. It's breaking to all-time highs. Nice cup, nice little handle, pushes higher. Ideally, this holds. This level has to hold this 21 EMA, this 382 area, 382.50. This low, basically, from the 28th, it has to hold in order for this structure to maintain and be valid. So I would keep an eye out here. FDX looks pretty solid. I'd be even interested in if it, even if it undercut and rally. I'm going to set a couple alerts in this area for a potential buy. FDX looks pretty solid for next week as well. So there's quite a few actionable setups. But overall, if you see, like most of the tech names, they have been basing, they've been consolidating over the past few weeks. They haven't been actionable. And now that we have earnings out of the way, we'll see how the market actually digests those earnings and decides basically what the future is, right? CME comes down, pulls in, nice little earnings bar here, and now it's starting to trend upwards. We just need this to get above the 8, above the 21, above the 50. That's at the 200 right now, or just a little bit above, but it needs a little bit more work, and then ideally we can get it to get going again, but CME is not super interesting. So anyways, back to what I was saying. A lot of the tech names, they've been basing, right? They've either got hits, some of them, most of them have been basing, some of them had rocketed to all-time highs. And overall, if that trend continues, especially with the AI trade, the market might just go to continue on grinding up. That seems to be the kind of the theme, no matter what you think. Even if you look at the monthly, let's pretend this is a daily or a 30-minute, whatever, right? Would you buy that bar? Right? Would you buy that bar? I think I would buy that bar. A little pullback into it, somewhere around 50%, 6,800 or so. That's a solid bar. And any other time frame, that bar is probably actionable. So I don't know why you would treat it any differently. You got to go with the flow. You got to go with the trend. You got to go with the market is telling you, not necessarily what everyone else on Finex or financials or anybody else is telling you. The market's a market. No matter what you believe should be happening, you have to trade what's in front of you, not the market that you want. So, all right, hopefully that is beneficial for you guys this week. Like, subscribe, all the good stuff. I appreciate your time. Just some closing thoughts. In a market defined by massive spending, the winners won't just be the ones who make the most money, they'll be the ones who can prove they can spend it efficiently, especially in this CapEx boom. All right, later.